Here's the broad picture, Budget 2022, the tax implications. Right off the top, no change in income tax slabs. What you were paying or what you are paying, that continues for now. There is a very positive move to actually assist you in case you made a mistake, you feel you need to, as an honest taxpayer, fix things. You can actually update your returns within a period of 2 years. There are also several measures to reduce litigation on repetitive tax appeals. There's a deduction limit for state government employees to NPS that's been raised from 10% to 14%. There's also a minimum alternate tax for cooperatives which has been cut to 15% from 18%. There's a surcharge on corporate tax which has been dropped from 12% to 7%. Tax exemptions to startups ended to March 2023. Long-term capital gains surcharge has now been capped at 15%. Let me introduce our panelists. Vikas Vassal joins us. He's a National Managing Partner for Tax at Grant Thornton, Bharat. Gokul Chaudhary, Partner at Deloitte. Pranav Sahita, International Tax and Transactions Services Leader at Ernst & Young. Vivek Gupta is a Partner and National Head at KPMG. So it's a great panel. Thank you very much all for being with us. Mr. Vassal, let me come to you first. And this is the question that, lakhs of middle class taxpayers would want to know. Is there any relief for them?
So if you look at the tax rates, the government has maintained a complete status quo, which means the tax slab rates as well as the effective tax rates which were there last year continue to be the same. There could be various explanations for that. Probably the government decided that we will touch the individual taxation system later on, even though there was a lot of expectation this year. But there is a complete status quo on the tax rate. Having said that, there are 2-3 beneficial provisions for the individuals. One which you just alluded upon, that based on the various sources, if the government finds out that there is some income which has escaped assessment or that has not been captured in a particular tax return, the latest being the annual information statement and other information which the government receives, then taxpayers, instead of getting into litigation, can voluntarily opt for revising their tax returns. Of course, this comes with a caveat of a heavy additional tax to be paid. Right. Similarly, the government has clarified on certain other aspects which will be beneficial for individuals, but effectively the tax rates remain the same.
Okay, so effectively the tax rates remain the same. Mr. Chaudhary, let's look at another aspect over here. The deduction limit for state government employees to NPS has been raised from 10% to 14%. How many people would be impacted by this? Government workers, government employees in states. What would this mean in terms of their take home?
Well, I think, Vishnu, one of the first things is a lot of people are going to sleep well tonight with no additional taxes coming down their way. And there was also a little bit of apprehension.
Well, they wanted a bit of relief. So I'm not sure you're necessarily sleeping all that well. But carry on. Yes, go ahead.
Yeah. So I think this parity that was being sought between the state government and central government employees has been there for a while. So it's good in a way that the government has done so. But of course, when you look at the numbers, the state government employees are probably larger in number than the central government itself. So it's multiple times of what sits in the central government. We don't have the precise numbers at the moment, but I think it's a move in the right direction to have this parity, specifically given the fact that we want to try and make sure that there is a seamless ability to even move IS officers, for example, from the states to center. And I think it's important that the state government employees feel that they're equally recognized by the tax system.
Okay. Pranav Sahita, the minimum alternate tax for cooperatives has been cut. It used to be, 18.5%. It's down to 15%. What is the goal over here? How will cooperatives benefit from this?
I think this clearly is a good move in the sense that so far as cooperatives are concerned, they were probably paying more alternate minimum tax than even corporates. And this is only to bring them to a level playing field. Not that all cooperatives would anyways fall within the alternate minimum tax regime, But nonetheless, the fact that they have noticed this, attended to it and rectified it is, I think, something that is certainly a welcome move, especially because this is a sector which certainly ought to be treated far more fairly than what would have otherwise than what one would have otherwise expected. Okay. On the other point that you were raising in terms of for the middle class, admittedly, there's nothing much here. And one did hope that to give a boost to consumption, some amount of tax relief would have come. But the one good thing I think is that at least the surcharge has been capped, so to say, at 15% for other than listed shares. Where listed shares was already 15, the other assets were not. And this applies across the board to all assets. Right. And therefore, any large, maybe house sold or residential property sold or whatever, which is not reinvested to get an exemption and there's a large gain, at least there is now clarity that there will be much lesser surcharge applicable even in regard to large incomes. So that I think is a good welcome step. Okay. And of course, NPS for state government employees is a good step.
Mr. Gupta, the surcharge on corporate taxes has dropped as well. To 7%. It used to be 12%. Again, how does this benefit corporates?
See, I think what the government, the original demand was that there should be parity between sale of listed and sale of unlisted shares. There should be parity between sale of listed shares and other categories of assets. The fact that the government is now indicating at least parity insofar as surcharge is concerned is directionally a great step. So the fact is, from a startup's point of view, this will be very good because if you exit startups, originally you could end up paying 28% tax on long-term exits and 43% tax potentially on short-term exits. And that now stands rectified in some sense to 23% and 37%. So this 15% surcharge is an extremely welcome step. I would hope that in times to come, the government even looks at the capital gains tax rate on this entire category of assets other than listed assets also. But the fact that the surcharge has been brought at parity is a good welcome step.
All right. What I'd like to focus on now is crypto taxes. Let's just bring up that graphic because there are some interesting taxation numbers over here, and it's been done with a clear message. I think the government favoring the RBI digital currency, which is about to come out at some stage, but certainly digital assets are being taxed. So there is a big divide over there. So virtual digital assets, there is no ban on crypto. Some had thought that perhaps that might actually happen. However, digital assets will be taxed. So transfer of any virtual digital asset will be taxed at 30%. There'll be a 1% tax deducted at source on virtual digital asset transactions. There will be no deductions to be allowed except the cost of acquisition, and the loss from a sale of a digital asset or assets cannot be set off against gains. So, Gokul Chaudhary, what is the message that the government is trying to sort of send, with this taxation policy on digital assets?
Well, I think in the last several months, there has been not only measures in India, but across the world by taxing authorities, including in the US, for example, to bring compliance and reporting around the digital asset space, including the cryptocurrencies as well as the NFTs, which have become very popular recently. The taxation regime around how digital assets were going to be taxed was never very clear. And therefore, it was prone to the fact that it could have opened up litigation in the years ahead. So the government has gone ahead and said very clearly what is a digital asset. And they have also articulated that they will bring it to tax at the maximum personal tax rate of 30% without allowing any deductions or any other losses. So they basically try to ring fence this income as a standalone distinct income and tax it as a separate basket. So I think in some ways the government is trying to be progressive enough to try and make sure that they can define the taxation regime before this becomes a matter of dispute.
Mr. Saida, how is this all, in a sense, a part of a government policy where they realize that you can't ban cryptocurrencies, But what they're trying to essentially do is encourage the RBI's own digital currency, recognizing that this does have a role to play in our economy going forward.
No, extremely good question. I think that the philosophy here seems to be that this is essentially profit which is speculative in nature, profit which is similar to horse racing profits or speculation profits or losses, and that's how they have categorized it, to say that it will be taxed at a very high rate, no expenses, no deductions, no allowances whatsoever, no set-offs being allowed, and if one suffers a loss, that loss also cannot be set off against any other income whatsoever and cannot even be carried forward. So it's a complete, it's a very deterrent kind of tax, and the whole philosophy, it seems to be brought out the way the provision is, that it is something that the government would like to discourage, and if it is something that an Indian investor invests in, then he has a very unfavorable tax regime, at least, that he has to deal with.
Yeah. Mr. Gupta, what is the broader message as far as widening the tax base is concerned? I know they're trying to make the process simpler. Every single budget, there is an effort at trying to do that. Were you convinced of some of the announcements made by the finance minister? Should there have been more announcements to actually simplify the process of collecting taxes, to ensure that the numbers go up?
Look, I mean, I think the government has been working on this very assiduously over the last few years. The economic survey itself pointed out that a number of compliances have now been made online. From a tax perspective, the new income tax portal had a number of technical glitches. Those have been sorted out. Even in this budget, if we see the entire process of taxpayer tax office interaction has been sought to be made smoother. So there's a whole section on avoidance of repetitive appeals, for example, wherein the government is saying that we will not repeatedly appeal for different years on the same issue if an identical issue is pending before the High Court or the Supreme Court. Likewise, there's lots in the fine print to suggest that the government wants to make this whole process of interaction smoother.
Right.
At the top of the program, you spoke about this whole concept of updated returns. Yeah. The government has said, look, we have data. You may realize in the next 1 or 2 years post-filing that there is something which is genuinely omitted, and therefore we will give you a window to rectify your returns and effectively file updated returns beyond the periods currently under law, available under law for revised returns. So I think the whole movement of the government is to go digital, to cut short friction points between the department and the taxpayer, and that certainly reflects in this budget.
All right. Well, I'd like to thank you all very much for being with us. No changes at all in personal taxes, but I think a couple of important announcements which have been made. Thank you all very much for being with us.